Hello, welcome to the webinar being hosted by the National Federation of Builders and Aldermore. I'm Mark Barber, I'm the Business Development Manager at the National Federation of Builders. We're a trade association to the construction industry, looking after £6.6 billion worth of combined construction turnover, 21,000 staff. I'll introduce you to James, who's our Head of Policy.
Thanks, Mark. My name is James Butcher and I'm Head of Policy and Research at the National Federation of Builders. I head up all our lobbying and public affairs activities and looking forward to talking today about Brexit and indeed how our colleagues at Aldermore are able to help and offer assistance in these uncertain times.
And then from Aldermore, we've got John.
Yeah, thanks, Mark. I'm John Carter. I'm the Commercial Director for the Commercial Real Estate business at Aldermore, which covers development and commercial mortgages. We offer development finance for just now currently over 110 developers around the country, which includes pre-let commercial and residential.
And he's joined by Andrew.
Hello there, I'm Andrew Dixon and I head up Specialist Finance. We provide tailored finance facilities for specific sectors. Construction is one of those sectors where we have the largest number of clients, and the contractual nature of the construction sector provides challenges to funders, which then results in difficulties for businesses in finding finance. We specialise in this sector and provide working capital for businesses.
Excellent, thanks a lot for that. Right, so we're going to start with James, who's going to talk through what the NFB have been doing in terms of Brexit.
Thanks, Mark. You might wonder why it is that we're still talking about Brexit, even though the government will have you know that Brexit has been done. But obviously the uncertainties and the issues around Brexit were largely dealt with very, very, very close to Christmas. And so a large part of our work was getting members ready for every eventuality. And part of my work was actually leading the Construction Leadership Council's Brexit working group, providing information, advice, feedback to government, and cascading everything that we possibly could down the construction supply chains to make sure that the construction industry could be as robust as it absolutely and possibly could be ahead of the either outcome of deal or no deal. Now, in the end, we did achieve a deal, but there were still some major changes that happened because of Brexit. And while I like to say that we are in a transition period from the transition period, so we have absolutely left and we finished the transition period, there are a number of deadlines that are still coming up and some changes that you ought to be aware of that we're going to touch on in this podcast. So I look forward to getting stuck into discussing those.
Yes, I mean, we at Aldermore see some potential challenges to our clients, and particularly around people and materials. We've been trying to support our clients in a number of ways. We've developed a campaign and some Brexit resources to support our clients with information. We've then been working with our clients to support them, particularly where the changes have brought issues around cash flow and finance. And finally, just generally raising awareness. And there's always the opportunity to signpost our clients towards experts who have knowledge of the changes, etc., such as the NFB.
Thank you for that. Yeah, right. So the UK's now become truly independent of the EU, and it's been a massive boost. The relief to businesses across the sectors, and a deal was agreed. The absence of any tariffs or quotas was a key win. Nevertheless, it will take some time for the new trading conditions to settle. So James, talk us through your thoughts on this.
So you're spot on, Mark, in saying that the absence of the fact that we achieved a free trade agreement was a huge win, both for the country but also for the sector. And actually just building on what Andrew was saying about the resources that they've been providing, we developed a Brexit hub and some of the for our members, and a lot of the questions and a lot of the interest came on actually how much is this going to cost my business. Now, fortunately, because of the absence of those tariffs, we obviously managed to avoid the additional inflationary effect of a tariff introduction. And indeed, the absence of quotas meant that there wasn't a sudden surge in demand as people worried about the introduction of these quotas. So that was another big benefit. The biggest benefit, however, was avoiding the shock to the currency, because a shock on the currency was, by all accounts, and the government's own economists said, was going to be the biggest risk to the UK economy if we didn't achieve a deal. And that would have made it very, very difficult for the construction sector. As anyone listening to this will know, the construction sector works on very, very tight margins. So big variation in costs would have had a really devastating effect both on cash in the system, but ultimately on a number of businesses' survivals. So that was absolutely something that we were really very pleased to achieve. Of course, there will still be some moderate inflationary effects, because as we have left the customs union, we now obviously have additional customs burdens, albeit not actual customs fees. There are things that people need to do along the supply chain, and so a bit of investment has had to go into that. So you will see some inflation, but not nearly as much as we had feared before the end of last year.
Excellent. And are we expecting any supply chain disruption?
So I think first and foremost, we should recognise that there is supply chain disruption right now, and I think John and Andrew are gonna touch on this in a moment. But from the Brexit point of view, the answer is no. We had a really comprehensive agreement on rules of origin, which means that the technical trade barriers that would have potentially stopped the exchange of products or the components that make up construction products going back and forth across the border, that was avoided and is based on long-standing EU precedent, which means that we actually can continue that trade relatively easily. And indeed, the UK came to some really positive ambition agreements with the EU in terms of working together and exchange of information on supply chains. And there has been a general, if you look at the amount of trade that's happened over the border, it has actually been very depressed, which indicates that to some extent people were stockpiling a bit, building up buffer stocks, both suppliers, manufacturers, and businesses themselves. So we haven't seen those long delays at the borders. There are some delays to supply, but whether they're down to Brexit at the moment, we don't think so.
Yeah, Mark, I'd probably agree with some of what James has said there. And having spoken to some operators, developers around the country, there are it's a supply-demand element, and I think there's an overhang from COVID in terms of entities that have furloughed staff, and then they're a bit slower in terms of creating the goods for the supply chain, married in with a bit of Brexit as well. And that in itself creates a little bit of hiatus and increase in costs. And certainly some of the things they've mentioned to me in terms of materials such as glass, roof tiles, plasterboard, white goods, there's elements of that the supply-demand imbalance is causing a bit of increase in pricing. So I agree, James, I think with what you said, there is an element of disruption, but I think there's an overhang from COVID here. And the one thing we do in everything, and we say this to every developer, plan for the unplanned, expect the unexpected. And so when we assess any funding, there's always contingencies built in, and we work with our borrowers on that. So you expect that things are going to go sideways. They always do, at least once, if not twice. And that's the nature of the beast in some ways. So guys who do development know that and plan for that. But I think it does probably just bring to the point what you've just said there, James. I think there is some element at an operational and practical level as there is a bit of supply chain issues.
Yeah, I mean, our clients are contractors, and the big thing for them is that they have to complete their projects on time, or they'll face financial penalties in their contracts. That means that material shortages are very challenging for them, And at the current time, we are seeing the issues that have been spoken about already, but most of these seem COVID related rather than Brexit related. I suppose the only other thing, it appears that there was quite a lot of material stockpiled prior to the deal being done in December. And maybe we're in a slight honeymoon period of those stockpiles being unwound. And it may be that we'll start to see some more issues once the normal level of import and export resumes.
Yeah, definitely. I mean, I couldn't agree more. And I think the issue with COVID is what it did was it created a backlog in that supply and indeed in demand, which then it was the shipping industry that couldn't deal with that. And you've probably seen in the press the price of containers has skyrocketed, which is leading to a lot of the price inflation that people listening to this might well be experiencing, as well as, and this is pre-COVID, we had shortages in both timber and steel that we still currently do have, and that is leading to shortages. And some of our members have been reporting that they've had to put in steel orders in January, not expecting them actually to arrive until August this year, which is, you know, it's a significant lead in time, and goes back to the advice that you were currently offering, John, that people really need to plan for that disruption. That was advice that we gave to our members too, and I think because of the uncertainties and what might happen, like you said, Andrew, as we see levels return to a normal, trading levels return to a normal level, it's wise to continue to plan ahead.
Yeah, James, and it's funny because I think Andrew made a good point there around stockpiling materials, because it's probably a QS's worst nightmare in some of these when we go around some of the sites. And we have seen a couple where they've had the space to do that, but they've done it to make sure they don't have their own supply chain issues. So they planned ahead and had a lot more materials on site than they would ever like to, and possibly I'm sure that their insurers would like to as well. But it does help them carry on in terms of what they're trying to achieve. To Andrew's point, time is money in these things, so any delay does cost in terms of that. So I can understand why they've done it.
I spoke to a brick manufacturer last week, and his entire operation is UK based, and he had a busier November and December than ever before. So even British stuff they were stockpiling. In the construction, we use a hefty amount of European labour. So how's that going to affect us?
We do, and this is one of the things that, deal or no deal, we knew was a change was coming. The government made it very, very, very clear that they wanted to end freedom of movement, and indeed they have, and in its place have introduced a points-based immigration system instead, which is now in effect as we speak. And that really kind of forces migrants to have skills effectively, which on the face of it sounds like a really good thing, but for our industry we do and historically have relied on quite a large amount of unskilled labour. So that system came in at the beginning of this year, and now any company who wants to recruit from overseas will need to register as a licensed sponsor, it's called, and pay for that. That takes a little bit of time as well, about 2 months to do so, and then you have to pay a sponsorship per immigrant that you offer a visa to come and work for you. So it's not nearly as easy as the freedom of movement that we had under the European Union. And it does require a lot more planning and a little bit more cost as well. And where you may have relied on umbrella sponsors before, so agencies to bring you a workforce, say 10, 20 workers across the channel, you can't do that anymore. Each employer has to sponsor each individual worker, which is quite a significant change from what we had before. And I think the sector is a bit worried about this, and we as the NFB have fed in and continue to feed into to the government our concerns on immigration and how it's going to work. We're concerned that the system currently uses what are called SOC 2010 codes, which are 10 years out of date because they've been replaced by 2020 codes, and that's the most up-to-date list of occupation codes. And of course, construction changes, we modernize, we expand, we progress, we move on. The government's always asking us to undertake transformation, and so it makes sense to use the most up-to-date occupation codes, but they haven't done that yet. So we're pushing on that, and they also haven't updated the most recent recommendations from something called the Migration Advisory Committee and their shortage occupation list. And the most recent one that they published was very favourable to, or was more favourable to, the construction sector. Because what that means is that you can actually get migrants in who don't necessarily meet the skills route in the new system, but might meet the shortage points. So effectively, if the UK economy is short of a certain amount of labour, then you can win additional points under the new system via the shortage occupation list. But that doesn't reflect the most recent publication from the Migration Advisory Committee, and therefore is less favourable to construction. So we are worried that we are backing up a problem for the future, and that the UK economy will not be able to respond as quickly as it needs to once the construction sector, really starts to get some steam under it, and we start to move forward. Where we go from there in the future, well, of course, the answer is to train our own employees and to do a better job than we have been doing. But that takes a long time, to get people up to speed. And also, sometimes the employment market doesn't allow you to access the level of unskilled labour that you might need either. And one thing that I've repeated a number of times is that those European migrants who are currently in the country, they, as long as they entered before the end of last year, they can apply for settled status or pre-settled status, which means that they can then stay here for 5 years or more. Now, they've got up to June 30th to do that. If they don't do that, then we do not know from the government what is going to happen to those people. For people who don't apply for settled status and pre-settled status. And by the way, as a business, you can't legally ask that of your employee, or if you do, you certainly can't compel them to tell you until after the 30th of June. You're legally bound not to discriminate against them compared to any other citizen, UK citizen. There is a risk that we might see employees leaving. There's not a statutory risk to you as a business. You won't be responsible for somebody being here illegally. You don't need to worry about that. But you may need to think about, if you have got a large proportion of EU workers, that there is a chance that some of them may not have pre-settled status or settled status, and a worry that the government hasn't told us what it's going to do about those people after the middle of this year.
I think I think James makes some excellent points there, and actually very relevant. And there's always been labour shortages or talk about that, but it's always I think now is coming to a head. And I think your points are really well noted, James, and very timely. But also there's some good practical advice in what you're saying. So I think for anyone listening to this, they really should be taking on board and referring to NFB, because I think it's going to really help them. And I mean, as you'll be aware, I suppose it's not a new message, and there have been quite a number of players who have done things like set up their own academies and do their own training. But as you say, this is not an overnight fix. It will never be an overnight fix. So yeah, but I think it's just a very good example of why, if they are concerned, they should be referring to your good selves, because I think there's some really good advice there in what you've just laid out.
Yeah, I think it's fair to say is the availability of skilled tradespeople has been a topic of conversation amongst my clients over many years since I first started getting involved in lending to this sector. I guess unfortunately these changes are basically going to reduce the number of skilled workers that are available in the, I'd say, probably short to medium term. What I can say is obviously lots of great advice available from yourselves, but I think it's also is businesses with what they can should look to support the workers that that are with them already, and it does raise this old chestnut, which again has come up in conversation over many years, is as how is the wider industry, as an industry, going to sort of address the skill shortages and try and encourage and perhaps, government incentivize the ability to train more tradespeople going forward for the future.
And I think Andrew and I have discussed this before, but certainly some of our our customers, they've leaned into their local communities to aim for those people that may be looking for opportunities and haven't kind of thought of that. And it has worked in some cases, but as we said, it's not an overnight fix. It's just something, but I think that's why these things are useful, to make people aware that there is some action they do need to take quite quickly.
Okay, another thing that the EU used to love, or probably still do, is a standard. So where do we stand now on the CE marking?
Where do we stand on standards? Mark, you say that the EU used to love it. Well, actually, the construction sector, generally speaking, quite liked alignment in standards as well. But the government made it very, very clear that they want regulatory divergence, or the ability to undertake regulatory divergence. And this again comes back to what I was saying at the beginning about transition from the transition. So at the moment, you'll still continue to see construction products with CE marking on them, because legally the UK government has said you can continue for this year only to put as in on the GB market, and it starts to get a bit complicated when we start to consider the GB market and the NI market. But for the time being, you can continue to put products that have been properly CE marked on the UK market. So there, we're not seeing too much change. But next year, things will change dramatically, because that won't any longer be recognised, and EU exporters will actually have to apply the UK CA marking instead. And so there's going to be quite a lot of testing going through UK testing houses in order to apply that. And it will be interesting to see how that actually comes about in the future, and how that actually works. There's also some real challenges, and you've again probably seen this in the press, between UK and NI. So in Northern Ireland is still, technically speaking, within the single market, which means that it can still apply CE marks to products if it uses a European notified body. And if it does that, because it has the right to unfettered access, a Northern Irish supplier can actually put a product with a CE mark on the GB market after the end of this year, but a UK supplier couldn't, and nor could an EU supplier. So it gets very, very complicated. And then, of course, there's the added difference of the CE and UK NI mark that will go on goods that are only meant for the Northern Irish market. So it gets very complicated. So that is definitely something to watch in the future, and how that changes and how that affects goods coming into the country, and the ability for those goods to change their marking. I mean, hopefully it's a long enough lead-in time that the industry will be ready, but it's definitely a big change that's coming. And of course, going back to something that Andrew said earlier, we at the moment we're seeing a depressed level of imports into the UK, because people have been stockpiling or building up buffer stocks in terms of construction products and materials. This is, but that will pick up. And not only will it pick up, but the rules on the declarations of those imports will change as well. The UK government has been very, very liberal in its approach to making customs declarations, and has given traders up to 6 months to declare them and pay the relevant taxes. And so until the middle of this year. After the middle of this year, however, they need to be declared on arrival, or I think it's within about 4 days after arrival. So that's going to see a big change as well. So there are still some bumps in the road that I think we need to have a think about.
That sounds like an interesting debate for future. Right, so the construction industry relies a lot on funding, whether it be from the EU or from our own government. So where do we stand going forward?
Yeah, so we a large number of infrastructure and construction projects around the country, usually the bigger ones, relied on EU structural funds or regional development funds. And of course, those have now gone. So what will be in their place? And again, this comes back to something that we will be doing for members. We will absolutely be doing everything we can to lobby for the best outcomes for construction, and not just big contractors, but so that it's equally beneficial to SMEs as well. And you may have seen, and it's literally hot off the press, I think it was Monday, just gone, and at the time of recording we're at the beginning of February, that Kwasi Kwarteng, who is the new Secretary of State for Bays, announced that the government is now opening up its consultation on what will replace those EU structural and development funds. That's known as state aid. And so there's I think, a real big opportunity for the construction sector here to get its ducks in a row, and certainly from our point of view, we'll be lobbying hard to make sure that state aid, as much as possible, benefits the construction sector and helps us to achieve what the government wants, which is the build, and build back better agenda. So yeah, it'll be interesting to see what comes forward.
John, do you want to add comment?
Yeah, I mean, clearly we're a part of providing finance to assist in terms of development, and I think, as I said at the start, we fund residential development as well as commercial development, and we also provide the ability to refinance that onto commercial mortgages at the end, which is becoming quite a popular option. In terms of government support, the stamp duty freeze, we've certainly seen a massive acceleration of sales of residential, and trying to happen before the drawbridge shuts down at the end of March. And the Help to Buy scheme, which has been in place for some time, there's a relaunched Help to Buy scheme that comes into play in April, and that'll be interesting to see how that plays out. It's for first-time buyers and new homes only. And where the limits prior to that were 600,000 across England, there's quite a divergence of what those new limits are in terms of funding. So that may have an interesting impact in terms of the exit plans for what's being built. And in terms of government, they've been very good in supporting certain areas, and I think Homes England, have really got a good name for trying to support and that's led by the government agenda to ensure that there is provision of good quality homes, and there's still that requirement there in terms of residential space, and they have been very innovative and working with banks to try and help grow their provision. So there's definitely going to be, the government understand this. They have given many stimuli to assist certain parts of the market, and as you said, James, the build message is there. So I think it's just being aware of what's available and making sure you support that going forward.
Yeah, it's interesting. I mean, I work with primarily contractors who are working on projects, and I guess the trends in their businesses affect what's going on in the wider market, in terms of levels of house building and infrastructure projects. The sort of structural changes we're talking about in those markets, but probably tend to affect those businesses a bit more in the medium term, because they've probably got a committed pipeline of work for the next 12, 18 months, even 2 years, in terms of the committed contracts they hold. So it's the changes that are going to come through after that, in terms of, is the level of new build started going to decline? And I guess, the changes we've talked about in relation to the housing market could potentially suppress activity in that sector, and thereby will feed down across the activity in the sector. However, there is this thing of, the subtext is the government still needs a very high level of new house building to carry on, given what I find astounding statistics of the number of people who live in a house on their own these days. So there is going to be a requirement to keep the level of house building up, and I assume that the government, will maybe with different incentives may well have to assist with that. And then if we look more into the infrastructure market, there's quite a lot of activity coming on, and seeing with, you know, across my client base, HS2 finally has got underway, and that suddenly switched on the sort of tap for a lot of work. And I'm sort of guessing is, yet it'll be what support funds there are, but also is what is, you know, the government's ambition in terms of infrastructure, which in some ways is always bringing those projects forward in such times is a good way of stimulating economic activity. But it'll be interesting to see how that develops over the next few years.
So that concludes the chat around about Brexit. We will be having another webinar very soon, which is going to be about IR35. It's going to cover reverse charge of VAT, and it's even going to cover the prompt payment platform. So look out for it coming soon.